The E-mini had a sell signal bar on the daily chart on Wednesday. The sell signal triggered yesterday when yesterday went below Wednesday's low. However, instead of a big bear bar closing on its low, yesterday was a bull bar closing on its high. It was a reversal day and a bad entry bar for the bears. And it is a high one buy signal bar for the bulls. We have had many of them over the past 4 months. Every pullback has been 1, 2, or 3 days. And this is a one-day pullback. By gapping above yesterday's high today, we are triggering the buy signal. However, we're also at the top of a now 5-day tight trading range, and that might limit the upside. Also on the weekly chart, over the weekend, last weekend, I wrote that we have 2 big bull bars late in a bull trend. It's unusual to have a third big bull bar late in a bull trend, and therefore this week would probably be some kind of a pause, like a small bull bar or a bear bar. And so far, it's a small bull bar. I've been comparing this to this bull trend, 2 big bull bars late in the trend, a small bar, 1 more push up, and then a trading range. And I think we'll do something like that. And I do not think we'll get this big of a sell-off. The reason why we had a 10% sell-off here was this was the most overbought that the stock market ever was in the 100 years of the stock market. So you'd expect a bigger correction. This is not the most overbought in the history of the stock market. So I think we'll get down to below this low, and that would be about a 5% correction. Right now, we're trying to break through a new all-time high, just a little bit above where we are, right there. And the bulls really cannot do too much to influence the weekly chart. Today's the last day of the week. The bulls so far have a bull body. It's possible that we get back down to the open of the week and we get a doji bar. However, I do not think the week will be have a body as big as these past 2 weeks, so it'll be a smaller bull body probably. And the bears had their chance. Yesterday was the entry bar for a sell signal on the daily chart, and instead of a big bear day, we got a bull day. That, I think, means the bears missed their opportunity. It reduces the chances of a big bear day today. Here's the open of the week, and it's certainly within reach. It's about half of yesterday's range. So we still might end up with a doji bar on the weekly chart. This channel has gone on for a long time, and this tight trading range might be a final flag. The 60-minute moving average is a magnet as well. But it's tough to make money with stops when the market is in a tight channel like that. We're at the top of the channel. There are different ways to draw it, but this is one way to draw it. Certainly near the top of the channel. Different ways to draw the bottom of the channel. I'll use these 2 lows. If you use these 2 lows and then create a parallel and drag that up to this high, if you draw the channel that way, if enough computers are drawing it this way, we're pretty much at the top of the channel. Now, what about selling below 1? The reversal down from the top of the channel, a failed breakout yesterday's high. We have plenty of room to the moving average. The probability is high that you'll make money, but as is often the case when there is a lot of trading range trading, you get high probability setups with terrible risk reward. It's unlikely that we're going to get a huge reward, big sell-off from a relatively tight bull channel. So the reward is not big and the risk is big. So selling below 1, stop above 1, that's not great math. Certainly, bears will, certainly bulls will get out of their longs. But this is not a strong sell setup. You can see we're right at yesterday's high, so we're trying to close the gap. bear bar closing there slow, you'll have some bears immediately selling at the market. But the problem they have is what I said, the risk is really big. Sometimes you'll have a gap up, you'll come down right to yesterday's high, or even fall a tick or two below yesterday's high, and it becomes the low of the day. You get an opening reversal up. And you can see a big bear bar, bar one, overbought market, top of the channel, yet what happened? There were more buyers than sellers below one. Can you buy above two? No. It's too big of a bear bar, and the bull trend weakened considerably here. So I think the bulls will need a micro double bottom. Now, what about the bears that sold the one low? If they use a wide stop, they'll probably make money. We had a bull trend lasting a lot of bars, and then it started becoming more two-sided, more balanced in here. So chances are we're going to enter a trading range. Globex chart. Tight range all night. Buy climax, second buy climax, and then an endless pullback. 90% chance the day session breaks out of the Globex range, either below the bottom or above the top. And when the Globex range is relatively small like that, it's definitely a 90% chance. If you have a huge Globex range and you open in the middle of the range, you're still probably going to break out of the range, but the probability is more like 80%. High one, bull flag, and a small pullback bull trend. Here we went sideways for a lot of bars, but the pullback was still small, so it's still part of a small pullback bull trend. Most traders, I think, are not going to buy above two. Just like I said, most traders would not sell below one. I think the bears who did sell will scale in higher because they know the odds are two is not going to be the low of the day. We'll have to go sideways more. Limit order bears sell the one low, they sell the one close, they sell more 1 point higher, 2 points higher. Probably, well, they've already been able to avoid a loss if they wanted to. And stop order bulls, a high one, but the channel became a lot weaker through here. So not a lot of bulls are going to buy above two. The bears are hoping one is the start of a bear trend, and then they see three as a pullback, so it's a low one sell signal. But two bull bars in a fairly tight bull channel, not a particularly good stop entry sell setup. Yesterday we ended with a ledge. The final four bars had identical highs, so you know the odds are we were going to go above the ledge, which we did on the open, and the odds are we're going to pull back at least one tick below the top of the ledge, which means the odds are we're going to close the gap above yesterday's high. Can today be a big bear trend day? I don't think so. Yesterday was the entry bar for a sell signal, and we got a reversal up. So the bears had their chance yesterday. It's unlikely that they're going to regain a lot of control after being unable to get control when they had a good setup on the daily chart yesterday. However, I've been talking about the open of the week since the week opened on Tuesday, saying that the week might be a doji bar on the weekly chart after two very big bull bars, and that's still possible, so we still might get down to the open of the week. It's on a sell below one. I would not sell below three. And I did not sell below one. I'm currently flat. You can see we're on the Globex chart just above the Globex low, so we'll probably go lower. And on the day session chart, we're at the bottom of the channel and at the moving average. And I said yesterday that bar 64 or 54 or 56 might be the start of a trading range, and that this rally was a bull leg in a trading range. And that's still true. This is a bull leg in a trading range. And you're going to be thinking that we're probably going to come down to this area, and this rally will be a bull leg in a trading range, and the sell-off down to this area would be a bear leg in a developing trading range. For the bulls, we have two legs down, so you can call it a high two. I would call it a high one because we did not trigger a high one yet. Globex bulls trying to keep it from getting below the Globex low. Well, we're right there. The bulls are hoping it's 2 legs down, 1 pullback 2, and that we continue up. At the moment, it's more likely that we're going to break below the Globex low because we're so close to it and we have reasonably good momentum down. Limit order bulls, some of them put limit orders to buy at the moving average, 1 tick above, at the bottom of the bull channel or 1 tick above. What happens if we have a bull bar 5, possible opening, reversal up, a higher low, and a bull channel? I would still not take the buy. I think this entire rally looks like a leg in a trading range, and therefore the bottom of the range is at the bottom of that leg, and therefore we have a magnet there, and we have 2 other magnets just below that. Sometimes the market races down to the Globex low or up to the Globex high, does not break out, and reverses. Usually you'll get the breakout. So it's still more likely that we're going to go lower. But it's a credible setup for the bulls. I'm not going to buy above 5. It's a 5-bar bear microchannel with no strong bull bars in the first 4 bars. So even though bull trend, it's just not strong enough. It looks like trading range behavior, and the bottom of the range might be down here where that trading range behavior began. The bears, if they sold below 1, I'd get out above a bull bar closing on its high. But if you have a fairly conspicuous tail on the top of 5, I think a lot of the bears will hold short. You can see we're right at the Globex low. Probably we'll get below it, which means probably we're going at least 1 more tick down. 5-bar bear microchannel, sellers above. Low probability buy. What happens if 6 closes on its high? Can you buy above its high? I don't think so. I'd wait to see if we get 2 or 3 consecutive bull bars. What about the bears? Interesting math, right? So they sell below 1, and it fell 10 ticks, so they got their 2 points, and they bought back their shorts, or a lot of them bought back their shorts, but they had to risk more than 2 points to make their 2 points. So not great math. Globex chart, 2 legs down, 1 pullback 2, and a lower low, double bottom. So a double bottom, slightly lower low. But they'll need a pretty good bull bar to attract buyers. It's a tight bear channel. 7 o'clock, often there's a report or a news announcement that can lead to a surprise up or down. Are we always in short yet? It's hard to say that. We're still above the moving average, and we do not have consecutive big bear bars closing on their lows. So we're probably still always in long. That does not mean that we're going to go straight up. It just means we're probably not going straight down. We could go sideways and then resume up. Not a good buy signal bar. So even if we go to a new high, we'll probably come back down to that 5 high. Similar to yesterday, not a good buy signal bar 2. And even if we go up near the high, we're probably going to come back to that buy signal bar high. Bears want double top 2, and bulls hoping strong enough breakout that 7 is a pullback from the breakout and not a reversal in a failed breakout. What do you do here? I think nothing. I think bears get out either above 5 or 4 or 5 ticks above 5, and the bulls, it's a 5-bar bear microchannel with no strong bull bars in the first 5 bars. So most bulls did not buy above 5 with the stop. Can you sell below 7, double top 2? Probably not after 6. Confusion, right? So usually confusion means more limit order traders. They bought below 1, they sold above 2, they bought below 3, and if they bought below 4, they'll probably sell above 5. So looks like a trading range open. That can last for an hour or two before we get a clear buy or sell setup. Big bull breakout 47, big bear bar 48, but it was a pullback, not a reversal yesterday. Big bull bar 6, big bear bar 7, a pullback, not a reversal. Confusion. Limit order bears 5 high made their money. They sell 5 high, they sell more 1 point higher, and then it gets back to the 5 high. They buy back their shorts. Double top bear flag 2, but surprise bar up 6. That will limit the number of bears willing to sell below 7. On the open, very common to get traps. Strong bars or strong legs that immediately reverse. Big bull body 6, lots of limit order trading, so might be more buyers than sellers 6 low. Apparently flat. This is a scalping market, mostly limit order scalps. Bulls trying to get a high 2 that would have a higher probability of being profitable if they can get a decent buy signal bar 2. And the bears are trying to take control. They're trying to get big bear bars closing on their lows, consecutive big bear bars. Remember, I think we're in our trading range, and the trading range began somewhere down here, and the bottom of the range is therefore a target, as is the 60-minute moving average and the open of the week. So we got several magnets down here. You can see the bears are sold below 1. It's hard to hold short. It's not quickly falling. There's hesitation. The market is balanced. Bar 1, in general, 20% chance it'll be the high or low of the day. Here we have an overbought market and a probable trading range, so maybe it was a 25% chance that it was the high of the day, that it will remain the high for the rest of the day. Now, at this point, by the close of bar 7, there's a 50% chance we've seen either the high or low of the day. So 8 could be the low, 1 could be the high. It's more likely that 1 is the high. Right now, it's probably a 30 or 40% chance that we've already seen the high for the rest of the day. To buy above 8, the bulls need a good bull bar. Traders are starting to think about the 60-minute chart. Head and shoulders top, left shoulder, head, right shoulder. So bull trend, a break below the trend line and a pullback, so a lower high, major trend reversal. Tight bull channel, 8 bars in the micro channel, lowers the probability that this first 60-minute bar is going to result in a bear trend. The market probably would have to go sideways for a few bars before the bears can get a bear trend out of this. Bears trying to get a gap, a close below the low of the prior bar. They'd like to get a big gap. They'd like 8 to be a big bear bar closing on its low far below 7. If they get it, then the bears might be able to get down. They have a double top bear flag here. This is in that support zone. Of the week. So it's still on the sell, but not falling quickly. High 2, but 2 bear bars. Most bulls are not going to buy above 8. What do the bears do? I think it's tough to hold short if there's a bull bar 9. I think especially if it has a 2, 3, 4 tick bull body. But right now we're still on that short below 1. We have 3 legs down. 1, 2, 3. So this is also a wedge bull flag. It's a high 2, high 1, high 2. This never triggered a reversal up, but it's still 3 legs down. And on the open, you get wedges that just don't look right, but they still are, they still can lead to trends. So I would get out of shorts 1 tick above a bull bar, maybe 4 ticks above a bear bar. And for the bulls to buy, they want 9 to close on or near its high for a possible low of the day. 60-minute chart right now, a bear body. There's 18 minutes left. We could still end up with a bull body. It's just not likely. At this price, sideways, sideways. So you have to assume we're going to be having a lot of sideways trading today. We have a lot of limit order trading here, a sign of a trading range. Bears broke below 5, could not close below it, so not a reliable sell the close type of market. Traders are still deciding bull flag or bear trend. Certainly not a scalp buy, right? Traders buying this are buying for a swing. I do not think it's going to work. I do not think this is going to be the start of a swing up. Too many bear bars and a lot of trading range trading. The bottom of that trading range trading, the bottom of that likely trading range is here, not here. The bulls are hoping that we're converting a bull channel into a broader bull channel and that we continue higher, and we might. But right now I think it's more likely trading range trading began here, and therefore the market will want to test the bottom of that trading range trading. So while it's a wedge bull flag, I would not buy it. I think we're in a relatively tight bear channel, and we have a good reason to go lower. So I would wait to buy. If we get a surprise bar up or 2 or 3, 4 bull bars, then I would buy. You can see how it's difficult to hold short. The bulls have a credible wedge bull flag. The bears do not yet have a gap. They do not have a close below 4. They had a little gap on 4, closing below 3, but the body gap immediately ended when 6 closed above these bodies, the lows of those bodies. So it's one of those small pullback bear trends, kind of an endless pullback type of bear trend, constantly trying to reverse up. It makes it very difficult to hold short. Odds are we're going to get down here. Bears finally have a reasonable chance at a gap, but we're pretty close to the targets. Weekly chart, you can see small bull body. Open of the week is here. Gap, we have a double top bear flag, measured move. And it's possible we get a measured move from the 9 low, but we're at the target zone, the start of the channel, 60-minute moving average. Really not a very good location to sell, but nothing to buy yet. And enough of a surprise, 10, so that we'll probably get at least a small second leg sideways to down. 60-minute chart, outside down, possible parabolic wedge, and big bar, big breakout, 10. So bears want measuring gap, and bulls want exhaustion gap. We're at the bottom of the range, so you have to assume there'll be some buyers here. 60-minute moving average, there'll be buyers here. Some of the buyers are bears buying back shorts, but you'll also start to get some bulls buying here as well. Stop order bulls, can they buy above 11? It's a possible start of a swing up, but I think the bulls will want a good bull bar to take that buy. 10 is a surprise bar down. Therefore, traders will think that we might have to get a small second leg sideways to down. So I'd get out of longs above any bull bar, and if it's a strong bull bar, it's a possible buy for a test of the top of the most recent sell climax, the 10 high. Remember, we have a 7-bar bull microchannel, unlikely to immediately become a bear trend, so we're probably going to start going sideways here. Remember, yesterday I talked about this as a bull leg in a training range, and I said there'd be a bear leg in a training range. Well, right now we're still in the training range. We're at the bottom of it, but we're still in the training range. So unless we sell off strongly from here, we'll probably do what we did at this price yesterday and start to go sideways. Bears want no bull body on 11. They have a breakout 10, and they'd like to get a big bear bar closing on its low. The one thing they do not want is a bull body, even a 1-tick bull body, because it would reduce the chances of this continuing down. What's probably going to happen? We're probably going to get a bull body. We're at the bottom of a training range, and this is where bears buy back shorts and bulls start to buy. That does not mean, a bull body does not mean we'll start a bull trend. It just means it weakens the bear case and increases the chances that we'll do some sideways trading. So possible low of the day, just like 1, possible high of the day. 1 had good probability but bad risk. This has lower probability and lower risk. If it closes on its high, credible buy. It probably will not. It's probably better to wait for a second buy signal, high 2 or 2 or 3 bull bars. You can see they're fighting over that one final tick. Right, okay. Bad follow through for the bears, but not a good buy signal bar. So it's still more confusion. So even though we have a gap, we might get a measured move down, there's still confusion. Measured move might be there, takes us down near the open of the week. It's possible measured move is there, below the open of the week. And it's still below 11. It's a pullback in a bear trend. I would not. The bears want the measuring gap. Bulls want the exhaustion gap. I suspect that we're going to go sideways here for a few bars. 60-minute bar. This is bar 12, the final bar of the first hour. And opened up here, closed down here. So it's a big bear bar on the 60-minute chart. But bad context for the bears. We have a 7-bar bull microchannel and a trading range for 5 days. So not a good stop entry sell below the low of the first hour. Increases the chances that we'll go sideways more. I am flat. I don't like missing trends, but this is, I think, a risky type of trend. And the one reasonable short was below 1, selling below 7, 8, really not all that good. And then you have the bull bar 11, so not very good for sell to close. So the wedge, this wedge, obviously we're breaking below it, falling for about a measured move. Then you got to be wondering, maybe it's a parabolic wedge. 1, 2, and 3. Look where we are, all the way back down to the open of the week. That's the end of the first hour. It's a huge upside down bear bar, but too big. You know, most traders are not looking to sell below the low of that big bear bar on the 60-minute chart. Okay, we just went below the low of the bar, broke below this breakout point, but a lot of support here. Moving average, open of the week, breakout point here. I'm probably bounce here or soon. We went below the low of the first hour, the big outside down bar. We went below the 12 low, and what do we have? More buyers than sellers. It's not a good looking sell setup on the 60-minute chart. I would get out of shorts above a bull bar, and this is, I think, a reasonable location for a bounce. We have consecutive sell climaxes, we have a parabolic wedge. Unlikely that this will go straight up in a bull trend because this channel is tight, but we could get a minor reversal up. We're in the support zone that I talked about earlier, 64 low, 60-minute moving average open of the week. Because it's a possible low of the day, and we have a parabolic wedge and we're at support, there will be bulls buying if 13 closes on or near its high. But I think the first reversal up probably will be minor. Bulls looking for a swing up will wait for a micro double bottom, a double bottom. And for the bears, I would get out of shorts above a bull bar and look to sell higher, maybe around the 12 high and the moving average. Not very good sell to close. Bear breakout, bull bar, bear breakout, bull bar, bear breakout, possibly bull bar. When you get that kind of a sell-off, bad follow-through, and lots of bull bars, even small bull bars, you're probably going to get an hour or two of a rally. The bulls hope that it's like yesterday and we just rally all day. But usually, if you have a fairly tight channel, the first reversal up is minor, and the bulls need some kind of a double bottom. Can the bulls get the bar to close on or near its high? Minor reversal, but we could still bounce for an hour or more. Minimum target, top of the most recent sell climax, the 12 high. So the bears, low 114, but who's going to sell? Nobody. We have a parabolic wedge. We're at the lowest reasonable support that I've been talking about since the day opened. We have an okay bull bar, 13, 60-minute chart. We're in the bottom of the trading range from the past 5 days. We're in the middle of the range, but we went sideways here for 3 days, and we're at the bottom of that 3-day range. We went above it, reversed down, went below it, reversed up, and we're back into it. Can the bulls take this for a swing trade? I think it's a minor reversal. The bear channel is tight, so most of the bulls will be looking for a relatively quick profit. Some bulls 1 point, other bulls 2 points. For the bears, a low 1 short, 14, but parabolic wedge bottom at support, probably buyers below. Can we get down here? There's no limit to how low we can go, but we have a parabolic wedge and we're at reasonable support. Remember yesterday I said that 53 or 56 might be the start of the trading range, and that means that all of this could have been a bull leg in a range. Well, we're back down to that area here. 50% retracement. We're at a 50% pullback also. All right, so low 1 14, low 1 15, but I think most bears want to sell closer to the average price. We're getting bad follow through. We have a parabolic wedge. We have 2 bull bars here, so I would not sell below 15. I suspect there are buyers below 15, 14, 13. Always in short, low 1, but I think bears want to sell higher. I would not sell down here. Bad follow through at support, parabolic wedge, reasonably far below the moving average. Always in bears. I think they should have gotten out above 13, and we're still always in short. Theoretically, they have to look to sell again, but I would not sell below 15. I would wait for a low 2. Parabolic wedge at support, fairly climactic. I would wait for a couple legs sideways to up before selling again. Bulls hoping for a micro double bottom and another 5-signal bar. If the bulls can get a decent bar here, it would be a higher probability a second reversal up from the parabolic wedge at support. Possible low of the day. Is it still probably a minor reversal because the channel is tight? I do not think. I think we've seen the high of the day. All right. It's just a question of how high the bounce is, and it might be to the moving average, the 12 high. I've said on Wednesday that we might oscillate around the open of the week for the remainder of the week. We went pretty far below it yesterday and then pretty far above it, and now we're back to it. So I would not be surprised if we start to go sideways here. Bulls trying to avoid a bear body, and the bears know that the bulls want a bull body. The bulls want a bull body closing on its high, and the bears will try to prevent a bull body, even a small bull body. Remember, I said it was reasonable to get out of shorts above 13, and I said most bears probably would not short below 15, parabolic wedge down to support. We're still always in short. Bears are hoping to do things that would encourage bears to sell down here. At a minimum, they'd like to get a bear bar. They'd especially like to get a bear bar closing on its low. But I would still wait for a couple legs sideways to up before selling again. And the question is whether or not to buy. To buy above 16, the bulls need a pretty good bull bar. This is bar 16, so we're in that window around bar 18 when the market often tries to reverse. So we're in that window when the bulls will be looking for a bull bar on 16, 17, 18, 19, 20. They're looking for a bull bar for a buy for a possible low of the day, or at least for a swing up. For the bears, bear bar, good for the bears. Most bulls are not going to buy above 16, but the bulls are still trying to get a bull bar in the next several bars. Bears trying to get down to the next support. We sold off strongly 48, so we might get down there before we find the bottom of a developing trading range. You know, the common pattern to get a sell climax and then a trading range. Climactic sell-off, sideways. Big sell-off, sideways. A lot of early selling, sideways. So I think that's what we'll get, a big sell-off and sideways. And the market is right now looking for the bottom, and we may have to get down to that 50 low. That was a pretty dramatic reversal down yesterday, 48, so we might have to test it. Any bull bar closing on or near its high, the bulls will probably buy. I suspect we may have to come down here. I don't know, maybe 50-50 chance we have to come down here. But if we get a pretty good bull bar, bulls will start to buy. That's a pretty good bull bar, so I would get out of shorts. Bulls will buy for a swing up. Some bulls will get out below 16. Others will use a wide stop down here, buy more lower. But the odds are we're going to convert into a trading range at some point. This is a reasonable possible start of it. Possible spike, pullback, second push, pullback, third push. Market's deciding, is this the start of the range, or do we have to come down here? Since we've broken below that and below this in the open of the week, you have to be wondering where the next support is, and I think that is it. Spike, pullback, and then this is a breakout, but it could be spike, pullback, channel. For the bears, double top, 14, low one. I would not take the sell. I think this is a credible buy. Bulls, do they get out below 16? Reasonable to get out below 16, but it's also reasonable to buy more below 16, betting that we're going to convert to a trading range. I would say 70% chance we're going to convert to a trading range, and the market is searching for the bottom of the range. It's deciding, is this the bottom or is this the bottom? You sometimes get these funny things, and this is an example of computers playing chess and thinking several moves in advance. For example, look at the close of look at the high of 17. Everybody knows bulls are going to buy above 17. In a tight bear channel, a lot of bulls will try to scalp part of their position or all of their position at 2 points. That means it has to go 10 ticks above 17. However, the next resistance is the 14 high. The 14 high is 9 ticks above 17. So, the computers try to generate confusion, and I think the high of 17 is exactly 9 ticks below the 14 high to create a problem for the bulls looking for a 2-point scalp. It's reducing their probability. So I think it's not a coincidence that the 17 high is exactly 9 ticks below the 14 high. For the bears, double top 14, low one 18, might get down here, but the bulls have a credible buy on 17. Do you get out 4 ticks below 18? Nope. I think if you buy below 18, either you get out below 16 or you use a wide stop down here and you look to buy more. Said the bears probably sell below 15, would be buyers below 13. And I said the bears would wait for a second sell. This is a double top bear flag 14 and therefore a second sell. However, we have 4 bull bars and I think we're pretty far below the moving average. So even though it's a double top bear flag, I would not sell below 19. The open of the week, so that's good for the bulls. We're probably always in long, but I still think a trading range is more likely than a bull trend. However, we could get a pretty big bounce here. I said the 12 high is a target. We may come all the way back up there. I think it's important that we broke below it a second time, and 17 closed on its high. So we're probably sideways to up for at least the next hour or so. It's making us always in long, especially if it closes on its high. If it closes, okay, so I think that's enough for always in long. Really good context. 2 attempts to break below the open of the day, reverse up twice, a sell climax down to the open of the day, parabolic wedge, or break below the parabolic wedge. So I think we're always in long. Bears want double top 12. No, it doesn't matter. We're probably going to be in a trading range for the next couple of hours. This is a credible low to the range. If we go below it, guess what? Probably buyers not far below. I would wait for a second sell. This is, I think, very good for the bulls. Major support, and we reversed up twice from it, and the second reversal up is stronger up. So the bulls need 1 or 2 more ticks. We're at resistance, the 12 high, to get some profit taking here. But we're probably going to get a second leg up, even if we get a reversal here. I also, how I said that the 17 high was 9 ticks below 14. It's also 16 ticks below 12, the 12 high. So to me, it's fascinating how the computers think about this stuff in advance. They know where the bulls want to get out, and they make the entry price, 1 or 2 ticks worse than what the bulls need it to be, to reduce the probability. Can you sell? We're at resistance, moving average 12 high. Why? Right, we're always in long, and we should get a second leg sideways to up. So it's okay to sell out of longs here. You got 17 ticks above 17, so a lot of the 4-point bulls will get out at 17 ticks if it stalls here. But I would not go short. If we get a micro double top over the next few bars, the bears might sell, but the odds are we're always in long and we'll get a second leg up. even if we get our reversal back down 5 ticks above 19 close, so some buy the close bulls scalp 1 point. Probably buyers below 20, probably buyers all the way down. So low probability sell, unless we go sideways and get a micro double top. Bears double top at the moving average. But when you see a reversal like this and the context is good and the reversal up is good, even though you're expecting a trading range, you might go higher, but it's unlikely that you're going to go straight down to a new low. So at this point, the bulls are confident that either one of two things will happen. That we begin maybe a spike and channel up and get up to maybe the 10 high, or we'll get a bear leg and a higher low. But if it's a bear leg, and let's say this is the top of the range and this is the bottom of the range, we can get a bear leg all the way down here. So bulls, there are bulls buying here. They have a stop here or a stop down here, and they'll buy more lower. So you're only buying here if you can use a wide stop. And it's better if you can use a wide stop and scale in lower. And for the bears, it's the opposite. I would not take the sell, but if you were selling, you'd probably need a stop way up near the high of the day or above the high of the day. If the bulls did not get out at 17 ticks, right, they theoretically have to get out at some point. Reasonable to get out below a bear bar 21, but I think there are more buyers than sellers here. And for the bears, I would not take the sell. What happens if we get 3 consecutive bear bars? Then you might be able to get sell to close, but even then I still think the best the bears will get first time down is a leg in their trading range. Similar to this, strong rally, deep pullback, but a higher low. I think it's similar to this kind of a thing, or this strong selling, but a higher low, getting near a 50% pullback. Remember I said the bears could get 2 or 3 big bear bars, and traders will wonder if the bear trend has resumed. I still think this is going to be a higher low or a double bottom. I still think we're in a trading range. I'm looking to buy again. I did buy above 17. But I'm not selling this. I haven't bought it yet. I want to buy. We'll be back to always in short. I am still looking to buy possible expanding triangle. We just broke out of the 18 bar range. Remember I said we might have to get down to that 50 low because that was such a dramatic breakout and such a dramatic reversal. It looks like that's what we're doing. No, I am trapped out. Do I still think trading range is likely? I do. I think we're in a trading range. Searching for the bottom. 49 low is a possible bottom. And this might be simply a sell vacuum test of that low. I think bulls bought the 16 low and they bought more lower. They bought the 49 low. Break below the 18 bar range and bulls will buy above a bull bar for a failed breakout. The bears want follow through. They're hoping that this could be a huge bear trend day. I still do not think it will be. I still think we're in a trading range since bar 13. We have a new low, but I still think it's a trading range. What do I need to sell down here? No, I don't want to sell down here. So right now I'm trapped out. If we start to get smaller bars and a small pullback bear trend, I might start to sell below the low of bars closing near their lows. But low 123, I'm not going to sell it. This is too extreme. Can we get outside down today? Yesterday's low is, I think, too far down to get there. Also, I've been talking about the open of the week all week. So I still think we'll close within a few points of the open of the week. Important bar, 23. It's the follow through after a break below the 18 bar range. Right now, 10% chance we get back to the high of the day. pretty good sell-off, break below the 18 bar range. So after bar 18, if you're at the low of the day and you have a pretty good sell-off, only 10% chance you're going to get above the high of the day. Sometimes you'll get a reversal that lasts all day, so it could rally for several hours, but still stays below that high. So when I say only 10% chance new high of the day, it's still possible that we could rally for the next 4 hours. I don't think we will, but it's possible. Very impressive pair of bear bars, but I'm trapped out. It's too climactic. I don't want to sell at the low of a sell climax. Near the end of the second hour, and so far, a pretty good bar for the bears. So for the bears, you can call it a double top. You can call it a head and shoulders top, left shoulder, head, right shoulder, but not a particularly good sell setup. Extremely big outside down in the middle of a trading range after a 6-bar bull micro channel, 7-bar bull micro channel. Can the bulls buy above 24? Tail breakout 18-bar low. 22, 23 is so impressive that I'm probably going to wait for at least a micro double bottom. But it's too climactic for me to be selling at the low, so I'm trapped out. For the bulls, test of support, the 48 low, and expanding triangle, 13, 16, but two very big bear bars that will reduce the number of bulls willing to buy above 24. If 24 closes on or near its high, it's a credible swing buy. But a lot of the bulls will wait for a micro double bottom or for 2 or 3 consecutive bull bars. The bulls who bought the 13 low made money. The bulls who bought the 16 low made money. We fell a couple points below 16, but then went back above its low. I'd get out of shorts above 24, and it's a possible low of the day, but not really great math because of the size of 22, 23. Do bear trend days look like this very often? No. Days that look like this with lots of sell climaxes and lots of bull bars usually do not continue straight down. They usually enter a trading range. The days that last all day, the trends that last all day, tend to be more small pullback bear trends. So chances are we're going to enter a trading range. We're just trying to create a bottom. Here's yesterday's low. So it's possible that we'll get outside down. But I still think what I said on Wednesday is true, that we'll finish the week around the open of the week. So that reduces the chances that we'll go much lower. For the bears, breakout 23, pullback 24. 24 is a low one sell signal bar, but I'm not selling down here. And for the bulls, you got sell to close bears 23, disappointed 24. They might buy back their shorts and create a micro double bottom, so it's still a buy above 24. It's a better buy right now because you have sell to close bears 23, disappointed 24. If we quickly go back up, that will be a sign that the bears who sold 23 are very disappointed and they're buying back their shorts, and they'll look to sell higher, not at this price. We have a gap 16 low, and while not likely, it could be a measuring gap, and that would get us down below yesterday's low. Sometimes you get these gaps and you look at them and say, nah, no way that could be a measuring gap. And then the market continues down. So it's an important thing. Can the bears keep the gap open? I do not think they will. I think we're going to enter a trading range. So some bears bought back their shorts, right? 23 close. Bears selling at the market, selling the close, selling below the bar. Disappointed 24. And it looks like that tail represents those bears buying back their shorts. And if we start to go up, the bears could suddenly decide they have to get out, and we could get a fairly sharp reversal up. So it could be a second leg trap, leg one, pullback, leg two, a micro double bottom and the start of a swing up. So it's a credible buy above 24 because of the possibility of the trap. If you're buying above 24, you're looking for a swing up. And for the bears, I did not sell below 21. I did not take any. I didn't do anything during here. Did not buy. Did not sell. I got out of my longs, and then wanted to buy a higher low or a lower low. We did not get a higher low, and we have a potential lower low, but 22.23 is a problem for the bulls. They're hoping that it's a sell vacuum test of yesterday's 48 low. That's the buy. Looking for a swing up, possible low of the day. At a minimum, I think bears get out of shorts and look to sell higher. And bulls are hoping that this is the start of a channel up, maybe to the moving average, maybe all the way up to the 20 high area. For the bears, a low one. They're trying to keep the gap below 16 open. They want a measuring gap. Because I think the sell-off looks more like the kind of sell-off you get in a day that becomes a trading range, and then the kind of bear trend that lasts all day. I think we're going to close the gap. I think the gap below 16 will be an exhaustion gap. For the bears, a low 126, micro double top 24. I would not sell it. I think the bulls are still on their buy 24, but a lot of the bulls are hesitant to buy after such a climactic sell-off, 22, 23. Bears want a measuring gap and outside down, but I think more likely we'll soon enter a trading range. We tried to do that here, failed, and the bulls are trying again here. As I mentioned, I bought put spreads, the VXX the other day, because my concern was if we get a reversal down, it might be very difficult to short as it's happening. The bars are a lot of times big. The sales setups don't look good. You have to make quick decisions. So I'd rather just do it on the daily chart or weekly chart and with options and VXX. VXX is an ETF based upon the VIX, the volatility index, exceptionally oversold, and sometimes you get brief, very big rallies. 1 bar rally, 2 or 3 bar rally, and that's why I bought here the other day, taking a chance that we get something like that. So possible we'll rally $4 or $5 and get up here. On a percentage basis, if you buy down here, 13 something, and it goes up $4 or $5, it's a 30 or 40% gain. Still, limit order bulls buying new lows below 25, 1 or 2 points lower, either swinging or scalping. Far below the moving average, a series of sell climaxes. The market's searching for the bottom of the sell-off and the start of a trading range. Bears, I'd get out above any bull bar. I would be out of shorts above 24, and for the bulls, it's another attempt at the bottom of the range. The range might be from that high to this low, and the open of the week is around the middle of the range. I still think it's more likely that we're going to finish the week around the open than it is that we're going to get down to yesterday's low. Really difficult to sell down here. 15-minute chart, there's yesterday's low. There's one outside down. And bulls are hoping this is just a deep pullback from this. Another low one below 28, but just too far below the average price and too climactic for me to sell. Is that a wedge? maybe might get 3 legs down here, so it might be 1 pullback, 2 pullback, 3. Not a very good looking buy signal bar. We should get back to the 24 high at some point today because it was a credible buy. For the bears, a low 128, but I would not. I'm not going to take the sell. And for me, 28 is disappointing for a stop entry buy. It would be better for the bulls if they get an II here. Sell climaxes sometimes end with IIs. Sell climax, II, and the bulls got a reversal. Sell climax, II, even with the bear bar, bulls will start buying. Others will wait for bull bars and then buy above. I doubt we're going to get that kind of a reversal, but I think we're going to get back to the open of the day at some point today. For the bears, it's a low 1 and a bear channel. 22, 23, so extreme. We might get 3 pushes down, 1 pullback, 2 pullback, 3. For the bulls, it's an II, credible swing buy. For the bears, it's a low 1 short, but probably buyers below. They've been making money below 13, below 16, below 24, below 25, and they'll probably make money below 27. Can you buy the 27 low? The reason I am not is this is a surprisingly strong bear trend, and I think we're going to get a 5% sell-off, and I don't know if it's starting now. I suspect not, but it might be starting now, and because of that, I'm hesitant to buy with limit orders at the low, even though the odds are we're going up to the 24 high at some point today. Consecutive wedges, that's always good for the bulls, assuming we get a second reversal. Wedge bottom, tight bear channel, not very good. Tight bear channel again, but bull bar, the bulls ended the selling, and we ended up with a trading range. We have a high 2, a bear breakout, and another high 2, so a high 4. Complex bottom, high 2, another complex bottom. Another high 4, high 1, high 2, bear breakout, high 3, high 4. Tried to get a wedge bottom, broke to the downside, and then another wedge bottom. The bulls had a decent bull bar, and then a higher low. Tried to get a wedge bottom, got a breakout, another wedge bottom, and we got a third wedge bottom before the bulls were able to get a credible swing up. Here, the bulls need a good buy signal bar. And for the bears, I think it's tough to sell below the bull bar 26 and the doji bar 29. That's yesterday's low, so it's looking. It looks like we're going to get near it. I don't know that we'll get below it, but we're going to get near it. When you have a strong bull trend like we have on the daily and weekly chart, and you're expecting a reversal, and then you get the reversal. Reversal sometimes is very difficult to short on the 5-minute chart, and that's why I'm short in the form of options and the VXX. Bulls need a decent buy signal bar. It would have to be a pretty good bull bar for bulls to buy at this point. We're so close to yesterday's low that we'll probably have to get closer, and we may end up going below yesterday's low. Bears, I'd get out above a bull bar. I'd get out 4 ticks above a bear bar. And for the bulls, they will buy if they get a decent buy signal bar. Decent, at least a 2 or 3 tick bull body. But this is really not very good for the bulls. When the channel is really tight like this, okay, so that's a weak buy setup. When the channel is tight like this, if you get a reversal, it's probably not going to be all that strong. Consecutive bottoms, reversal, not all that dramatic. I am not buying above 37, or not buying above 31. Getting vacuumed down to yesterday's close. Sometimes you get almost outside down and then reversal up for the remainder of the day. I think that you need to wait for a reversal bar. Above yesterday's high, sold off strongly, right to just above yesterday's low, and then trended up the rest of the day. Strong sell-off from above yesterday's high, reversed up from above yesterday's low, so almost outside down, and then a swing up the rest of the day. Above yesterday's high, could not get below yesterday's low. The bulls got a decent bull bar right above yesterday's low, and then a swing up. So the bulls need a good buy signal bar. Same thing above yesterday's high, collapsed, but reversed up just above yesterday's low. Good buy signal bar. That's what the bulls need. What's a good buy signal bar? Is a one-tick bull bar good enough? It probably is not. But you can see traders are thinking about that exact pattern that I just showed. Outside down almost, and bulls buy right above yesterday's low. And the reason why we're bouncing here is some of the computers are aware of that pattern, and they have limit orders to buy a tick or two or three above yesterday's low, with a stop one tick below yesterday's low. So they're risking 3 or 4 ticks, hoping to make 10 or more points. Higher probability, you wait for a strong buy signal bar, or you wait for 2 or 3 consecutive bull bars. If you do not get a strong buy signal bar, you wait for 2 or 3 strong bull bars. And for the bears, it's a tough short. You know, we're not getting good-looking sells for stop entry traders. Outside down day, pretty unusual, right? A very big bull day yesterday, and then an even bigger bear day today. There's often symmetry, and it's pretty common for the breakout above yesterday's high to be about the same size as the breakout below yesterday's low. This is what the bears want, a breakout that is far bigger, and you know, they want to measure move down based upon yesterday's range. So yesterday's high, yesterday's low, measure move down. Another example. More often, you break below yesterday's low, and the bears accomplish their goal, and then they look to sell rallies instead of selling at the market. Here we continued down, but it was mostly sideways for several hours, and I still think that is likely. Here, sideways for several hours. Trading range took 2 reversals up, but sideways for several hours. And the nature of the selling had these climaxes. It's converting into more of a small pullback trend, but it's also a parabolic wedge sell climax. And I don't like to sell the bottom of sell climaxes or buy the top of buy climaxes. That's another gap on the daily chart. Some traders are perfectly happy day trading this from the short side, and for me, I'm uncomfortable doing it. I'm doing extremely well on my put and with my VXX, but I'm not doing anything here. Here's the VXX. So for every 1,000 shares, it's almost $1,000. So it's a really good trade right now. I don't know if we'll get that or just for a day or two, but I think we might get up to that area. It's possible that we get there. I'm not taking any profits yet. I'll wait. I'll probably take some profits up there. So is this due to the impeachment? That will be the excuse, but it's the reason why we're doing this is because we have a buy climax on the daily and weekly chart. The weekly chart. That's why we're selling off. The bulls are looking for any reason to take profits, and they could be using the impeachment hearing as an excuse to take profits. So I still think we'll get up to the 24 high. Not right now. I went short many different things over the past few days, and some of the things I just don't want to sell. Google, extremely overbought. I don't want to short it, but I would consider buying put spreads. And what I don't like is the spread. The spreads are so wide. It's still psychological, but the bid-ask spread is over $1. It was like $1.50 the other day, and the spread, if you're buying a spread instead of outright puts, it was wide. And you can say, well, Al, if it's $1, and if it was a $15 stock, it would be a penny. So $1 is okay. Psychologically, it doesn't feel okay. So I did not do anything with Google, but you could pretty much buy puts in anything, betting that we're going to get a 5% correction. As I said the other day, if you get a 5% correction in the Spider or the E-mini, many stocks have more volatility, more movement. That's called beta. So if the E-mini falls 5%, a lot of the stocks will fall 10% or more. And that's one of the reasons why traders are trading the stocks instead of the futures. Biggest bear bar late in a bear trend, right? It's a climactic end of the trend. 60% chance. Either this is the end of the trend or we get one more brief push down, and that will be the end of the trend. I thought the end of the trend was going to be here and that we were going to go sideways, which is what normally happens when you have a climactic sell-off. But now this has a 60% chance of either being the end of the trend or that we get one more brief leg down. So we'll probably begin sideways here. I might take some partial profits on my puts and my BXX, because whenever you get an exceptionally big profit, you might usually end up giving part of it back or sometimes all of it back. Get out of shorts. If you're really aggressive and you can use a wide stop, you buy. 15-minute chart, that's yesterday's low. This is a gap from, here's a 60-minute chart. Look at that gap there. I don't want too many lines. I'll get rid of the gap and just keep yesterday's low. Back to the 5-minute chart. Now, what about the sell at close bears 34? There are no sell at close bears 34. When you get the biggest bear bar coming late in a bear trend like this, bears will buy the close to take profits. They're not selling the close. So you get bears buying and bulls buying. If I was not talking when I bought the 34 close, I probably would not have. However, I do think it's a credible buy above 35. I doubt we're going to go flying straight up, but we may go sideways and then try to work higher. Bears trying to get another II like 29, but nobody's going to sell. I think the selling is done for the day. Some traders will have limit orders to buy a 50% pullback. from the reversal up. And for the bears, it's a low 135, a low 136. But that big bear bar 34 and the big reversal up 35, to me, represent an exhaustive end of the trend. As I said, you sometimes, in fact, 60% of the time you get one more leg down and then the end of the trend. But 60% chance either 34 is the end of the trend or we get one more brief push down and that is the end of the trend. Buyers or sellers below 35, 36? I think only buyers. Okay. Sell at close bears 34, disappointed 35, probably buying back shorts here. Less likely low 1 and we go down much further. This is the end of the hour. Break below the neckline of the head and shoulders top, 60-minute chart, left shoulder head, right shoulder, and close below the neckline, good for the bears. But 5-minute chart, we're probably going to go up, or at least stop going down. II, late in a sell climax. I would not sell below 36. And to buy above 36, you either have to trade small or use a, well, you got to trade small. Micro E-mini is another possibility. But I would, one thing for sure, I'd get out of shorts and probably not sell again. Not even think about selling again for at least an hour. How far up can we go? Well, it's a sell climax. It's possible we can get all the way up to the open of the week, although I think we probably will not. A reasonable first target might be some kind of a measured move, takes us up to the moving average. Here's the II. We had an II here, bear breakout, and we have an II here, and we're getting the bull breakout. It's a low 1 short, 37, but I would not short again for at least another hour. This was a sell climax at this point, and the II was a bear flag. It's typically a final bear flag, so typically it does not go down far and then reverses. In this case, we went down pretty far, but you still have to wonder if it's the final bear flag and if we're going to get all the way back up there. Still a low 1 below any of these bars, but this is so exhaustive that the odds are we're going to get a couple legs up for at least 10 bars an hour or so. And I think this is probably going to be the low of the day. And we may get a bigger bounce. Can we get all the way back to the open of the week? It's possible. Here's the high of the week. There's the open of the week. A little bit more than a measured move down. I don't think we'll get all the way there, but we might get up to this II by the end of the day. I think most traders agree this is probably the low of the day. The disagreement is what comes next. Are we going to get a reversal up, spike, pullback channel? So are we going to come up to this area, or are we going to form a trading range down here? That we don't yet know. Reasonable to take some profits around the moving average and the 32 high, so we're in the profit-taking zone. But the odds are we've seen the low of the day. The market's deciding, are we forming a trading range here or spike pullback channel? Are we going to get all the way back up there around the open of the week? Will the bears sell below 39? The bears are not going to sell. Okay, so there are buyers below 39. We're going higher. And the question is, do we pull down here first and then get a second leg up, or do we get just a small second leg up and have some kind of a very strong bull trend? So no selling. Nobody should sell for at least an hour or so. In a situation like this, when there's a high probability about what's going to happen, 36, I bought 36 as it started to turn up, and then I doubled my position 35, above 35. it just went flat, and but I'm going to buy again. I'm deciding whether to buy closes or buy a pullback. I'm not going to buy a double position this time. I'll go back to a regular position. The bears, 2 legs up, 35, 39. But I think buyers below, either at the 39 low or somewhere higher low. The market's deciding, is this a bull trend or is it a trading range? If it's a bull trend, it'll probably be a small pullback bull trend. If it's a trading range, we can get a deep pullback. I1, market's still deciding, are we going to go all the way up to the II-29, which I think we will, or are we going to form the top of a trading range here and come back down here? Less likely we'll get our new low of the day. This is probably going to be the low of the day, or at least the low of the next hour or two. There's trying to get a low 2 near the moving average. But I still think most traders are not eager to sell. They want to see more of a second leg up before they look to sell. The bulls stop below 34 because of the possibility that this is a bull leg in a trading range and that we come back down to the 36 low. I think it's slightly more likely that we'll get at least a small second leg up before we come down. Bears trying to get a low 2 short 41. If they get it, then we could come down to that 37 low. But more likely, I think we've seen the low of the day. I think we've seen the low of the next, certainly over the next hour or two. It's a problem for the bulls. If it's a bear bar closing on its low, it's a low 2 and a bear trend. So I think a lot of the bulls will get out below a bear bar 41. They might get out 6 or 8 ticks below a bull bar. But for the bears, I would not sell until we get more of a correction, more of a bounce, and start to get some bear bars. A lot of times when you get a bear trend and then a reversal, the market stalls, and traders wonder, is it the end of the reversal and will the bear trend resume or a trading range begin, or is it the middle of the reversal? So a lot of times on the reversal up, it stalls about halfway up. And here's the start of the channel, so spike, and then a parabolic channel. We have that II, we have the open of the week, we have the 60-minute moving average. There are a lot of magnets up there, and we're deciding, is this the start of a move up there, or are we just going to be sideways here for the rest of the day? I said nobody's going to take that short. I would not take that short. There are traders who will take that short. They know the probability is we're not going to get below the low of the day, but they might take the short thinking that, maybe we'll get down to the 37 low, maybe the 36 low, and there's plenty of room for a profit that's bigger than the risk. So there are bears who will take the short. Tight trading range. The market often enters a tight range in the middle of the day between 9:30 and 11:30, more often around 10 o'clock or so. Does it become always in short again? I think it has to break below 34. Remember I said that we're either going to try to get up to the start of the channel or form a trading range down here. You can see difficult to short. Bulls need a higher low. They're looking for a higher low major trend reversal or a double bottom. And for the bears, I think it's really tough to sell this low after such a big reversal up. Remember I said it might test the 37 low or the 36 low. Well, the bulls higher low, and the bulls taking the buy are hoping for a leg 1, leg 2 measure move up. And for the bears, it's terrible follow through. And you can see not a lot of sell at close bears 43. Well, the bears, they're hoping 43 is a resumption of the bear trend. 44 is a pullback and therefore a low 1 sell. But I don't want to be selling down here when I think a trading range is more likely than a bear trend. And for the bulls, it's an okay swing buy, but there's confusion, and therefore you're going to be thinking we may simply go up a little bit and go sideways. What happens if we break below 34? I suspect buyers below. I think we're going to be in a trading range for the rest of the day. But I certainly would not be selling on a stop below 34. and I'm not selling on a stop below 45. I'm looking to buy a higher low. The bulls had a decent bull bar 44, but unable to trigger the buy. Higher low, but not a very good looking buy signal bar 46. You can see we're right at 3,300, and I talked about that earlier over here. We kept trying to get above it, unable, and now we got above it, and we're testing it, and the bears are trying to get back below it. This is the daily chart. Double top bear flag 44, 47, but this is a good enough reversal to remain the low of the day, and there probably are buyers below it. So there's probably not a lot of profit potential selling below 48. Double top bear flag, but there's something else. Outside up 47, outside down 48. So it's an 00 bear flag as well, but the location is bad, so I'm not going to take the sell. I think this is going to be a failed 00 bear flag. No, this is not what I want. I don't know that I have a failed bear flag. 00 and a bear trend bear flag. This is, well, bear trend at this point, 00 bear flag. 00 bear flag, but late in a bear trend often becomes the final bear flag. Remember, it's an expanding triangle on a smaller time frame chart, and a triangle expanding or otherwise late in a trend often is a final flag. It's an area of agreement, and if the price gets below it, traders already agreed that this was a fair price, so this then becomes too low. Probably buyers below 34, but I did not buy the 34 low. I'll look to see if we get a reversal up and buy the reversal up. And I'm not short with the E-mini. I'm short other ways with puts and other things, but not from a day trade on my day trading accounts. I'm not short. I'm flat. Bears are hoping this is the resumption of the bear trend. I think it's more likely a bear leg in a trading range that began with a 35 reversal up. Not good sell to close. You know, swing traders might do it. I'm looking to buy a reversal up, expecting this strong minor reversal up was enough to end the bear trend. And therefore, instead of this being a resumption of the bear trend, I think it's probably a bear leg in what will become a trading range. But I need a good buy signal bar, and 46, not good. 49, not good. Bulls trying, wedge, 44, 46, lower low, major trend reversal. But the bulls need a decent bull bar, 50. Outside up is never as good because I view the buy signal bar now as 49. On a higher time frame chart, you can look at it as a 2-bar reversal and say 50 is the buy signal bar, which is true. But I think it's a lower probability bar because it took 2 bars to get the reversal. There's less urgency, there's less conviction that the low is in. So bears, I'd get out of shorts above a bull bar 50, and for the bulls, it's a buy, but you always have to wonder why it does not look better than this. So this is not a very good looking buy setup. And if I'm buying in a bear trend and the setup does not look quite good enough, I usually don't take the buy. I usually wait. Pretty dramatic sell-off, but I am letting it go. I think it's difficult to sell on the 5-minute chart. We're not getting, I think, really good sell signals. But this is a really good example of why I'm holding put spreads and shorts, because very often when you get a reversal and a really strong bull trend, you don't get really good sell signals on the 5-minute chart, and if you do, it's hard to hold short. Am I still looking to buy a reversal up? This is getting to be a lot of bars in a pretty tight channel. In general, I would prefer the market to stop going down, start to go sideways for a few bars, and then look to buy. So right now I'm trapped out. I'm not going to buy above 53. Not that clear, but we're getting a bear breakout below a bear channel. So I would get out of shorts above 53, and it's a reasonable swing buy. Can we get all the way back up to 3,300? It's possible. We've got a spike pause channel, so that would be the target. This is not violent selling, so there's some hesitation. That means that probably not all stocks are going down. I want to look at ticks. We got a very big tick extreme on that big sell-off there. Probably not the final low in price. It took a long time to get lower. We have a couple tick extremes here, not quite as extreme as that. I'm not certain that this tick extreme is enough for us to have to go down. 5-minute chart, it looks like we're probably going to reverse up. So it's a credible buy above 53 for a swing up. Maybe we'll get up here, 3,300, big round number. Bear is trying to prevent the buy from triggering. It probably will trigger. It's a parabolic wedge, 3 or 4 pushes down in our tight bear channel. Is it still a lower low major trend reversal? Or is this strong enough down so that you have to start the process over again? I don't know. I would not call it a lower low major trend reversal. I think you probably have to look for another major trend reversal, but it probably would be a higher low. It's possible we could get a wedge 1, pullback 2, pullback 3. But if we start to go up here, then the bulls will try to get a higher low. So I'd get out of shorts. It's a credible buy. Might get one more push down to a bigger wedge, 1, pullback 2, pullback 3. For the bears, a low 1, but 2 bull bars and a parabolic wedge bottom. So I would not sell below 54. Also, we're fairly far below the moving average. So it would either be long or flat. Can we get a strong reversal up from here? I don't think we will, but we may get back up to around 3,300. I don't want too many lines on the chart. So that's the low of 2 days ago. 15-minute chart. Low 1, but our trader's going to buy below 54. I don't know. I think the bulls will probably get out below 53, but I think there probably will be buyers below 53. Because of the tight bear channel, we might need a micro double bottom. The bear's outside down in a bear trend, but I would not sell down here. I would either be long, stop below 53, or long with a wide stop, scale in lower, or wait for a pullback closer to the moving average before selling again. It's a small pullback bear trend, so bears are selling for any reason above bars, below bars, but not me. It would be good for the bulls if they can get a second consecutive buy signal here, 56. They had a buy above 53. 55 did not hit the stop of the bulls. If they can get a second decent bull bar here, that would increase the chances that we'll get a swing up. What's happening instead? Why are we getting that tail 56? All right, I'll tell you why. Because some of the bulls have bought above 53, disappointed 55, worried that we're going to go lower, and they decided to get out around break even. So they placed a limit order, a tick or two worse than their entry price, and then they're trying to get out break even, and that's what's causing that tail 56. Disappointed bulls who bought above 53. However, if 56 closes on or near its high, I think it would increase the chances for the bulls, and the bulls who did not exit, the bulls who are flat, they will buy above a strong 56. Suppose we get a 3 or a 4 tick tail on the top of 56. that will reduce the number of bulls willing to take the buy setup. It's still on the buy above 53. For the bears, micro double top 54, 56, but most traders are not looking to sell below 56. Bears, I would have gotten out of shorts above 53. If they did, they got to sell again below a bear bar. 55 is a bear bar, but we have 3 bull bars, a parabolic wedge, sell climax. I would not sell down here. I would either be long, buy above 56, or wait for a better sell setup. Obviously, options have leverage. On a percentage basis, you make a much bigger percentage than you do trading the underlying, in this case, the E-mini or the spider. And the VIX also, the VXX has leverage. So E-mini, we're down 1%. VXX, we're up 5%. So it's about 5 times the size of the move that you're getting on the E-mini. And in special circumstances, as I said, it's sometimes worth buying. The VIX is kind of always going down. It goes up briefly, but it's always going down. Here's a monthly chart of the VIX. Every now and then they adjust it. If it gets too low, I don't remember the last time they did it, but with these levered ETFs like this, if the price gets too low, they'll do a reverse split. So instead of it being $8, they might make it, $50 or $80. For the bears, a low 2, but 3 bull bars, bottom of a parabolic wedge, bottom of a sell climax day. I did not take the short. I did buy above 53. I was one of the disappointed bulls. 55, we got out. I forgot where I got out. A tick or two below the 53 high, and then I was going to buy again above 56, and did not get filled. I'm going to leave my buy stop above 56 just in case we get a quick upside up. If this is a 5% correction, starting at 5% correction, a lot of times it'll be pretty quick. Like here, just 2 days. Here, 4 days. And, as I said, I'm going to say in the chart, it's probably around the bottom of this leg up. So around 3,200. And that would be about 140 points. That's about a 5% correction. And just the number itself, 5% is a magnet. And a lot of times corrections end almost exactly at 5%, 10%, 20%. And therefore, if it gets 4%, you got to think it's probably going to get 5%, which means it probably would fall just a little bit below 3,200. Here, very big sell-off, 10% correction, 4 days. Here, this was, I think, a 10% correction, and it was just a couple of days of big selling. Weekly chart, 20% correction, took a couple of months, but here, just 2 weeks down, 10%. 2 weeks down, 10%. This is 4 weeks down. But, the sell-off could be pretty quick. It could be just 2 or 3 weeks down to just below that low. I canceled my order to buy above 58. Above 56. We might wait until 11:30, 11:35 to get profit taking. My preference, obviously, is for the day to close on its low and for Monday to gap down and be a huge bear day. If Monday is a big bear day, I probably will take profits on a good part of my position, possibly all of my position. I'm not going to buy above 58, and I'm flat here. I'm not selling too far below the moving average, too many bull bars, and too extreme. So I'll let it go and look for a credible buy setup. I mentioned earlier that this was a double top, 39.31, and we're probably getting near a measured move down. Let me just check. That would be another support area. So we're exactly at a measured move here. So you'll get some bears taking profits and some bulls starting to buy. But for me to buy in a trend that looks like this, I really want things to look very good. So, and I certainly am not going to be buying with limit orders as it's falling like the daily chart. Close below yesterday's low, getting near the moving average, only the second time in 4 months. Will they buy it? Not with a day that looks like this. You know, if Monday looks like this, they'll buy it. This is just too big of an open profit. I just took some profits on my shorts, especially going into the weekend. I took about, I don't know, 25% profit, 25% of the positions off. Okay, I'm profit taking, and that means probably other people are profit taking as well. So we could get a profit taking bounce into the close. Going into the weekend, the bears have a huge profit, and there's always a chance that some crazy news will come out that'll be very bullish, and you don't want the market to gap up here on Monday if you're a bear when you have such a rare opportunity to take a very quick big profit. I just converted some of my outright puts into put spread. In terms of turning a put into a put spread, a common strategy is to sell a lower strike put. Let's say you're long a put, and let's say your total cost, let's say the put costs $5, right? And now it's worth like $8 or $9. And you can buy an out of the money, and you can sell an out of the money put for around $5, right? So a lot of traders will do that. So they bought a put up here for $5. The put now is worth $9, right? But you can sell a lower put way down here for $5. So you paid $5, you received $5. So your net cost is $0, and you have a good open profit, and you're allowing yourself to get more profit down to the price where you sold that lower put. And you also reduce some of the time decay, and out of the money puts are overpriced, especially when the market's falling like this. So so you're selling a really expensive put, so that's very good. Suppose we get a full inside bar here, 61, then it's a high 2, 59.61. Bears, I'd get out of shorts above a bull bar. And for the bulls, it's really not a great looking buy setup, but we are going to get profit taking. This is not going to last into the close. We're going to get something like that. So we're going to get a 10-point rally at some point between now and the close. It could be huge. It could be a much bigger rally than 10 points, but I think just throwing a number out there, given the size of everything, a 10-point rally would be correcting about half of this final leg down, testing that breakout point. I'm tempted to buy at the market because I know we're going to get profit taking. I said minimum would be 10 points. Well, it's going to be more than 10 points because we're already 7 points. So it might be 15 or 20 points or 30 points. I want to look at ticks again. Now I got down to about minus 1,000. Normally not the final low in price. So far it is the final low in price. And in this particular case, it could be because, as I said, I think we're going to get profit taking. When you have a strong trend, usually there's going to be profit taking, at least temporary profit taking, sometime after 11 o'clock. And oftentimes the profit taking lasts until the end of the day. Sometimes it just goes on all the way into the close, right? But usually you get some kind of a profit. I don't think we're going to get that. We have a lot more sideways here, a lot more prominent tails, so a lot more buying. But I do think we'll get some kind of profit taking here, big gap up, sell off, and then profit taking into the close. Some profit taking late in the day. Late profit taking. some profit taking right into the close. A very strong bear trend, but still profit taking. So the bears, a low one, and the ticks hit minus 1,000 here. So that increases the chances that we're going to get at least one more new low. The red line down here is minus 1,000. The lowest tick reading in several hours. We had a lower reading here, but this is the lowest reading in several hours. So we may get one more push down. The bears, if they get out above 59, 60, or 61, we're still always in short. But you know, I didn't short on E-mini. I didn't short with stops any of this, and I'm not going to be shorting with stops down here. I do not have last week's low drawn on the chart. There's a small chance we can go upside down on the weekly chart. We went above last week's high, and there's last week's low. It's 32.68. I do not think we'll get there, but we might. Low one short, but I'm not going to take it. I'm looking to buy a profit-taking reversal if we get a really good bull bar, and then possibly sell, but I want to sell closer to the moving average. We have not touched the moving average in 40 bars, another low one, but I'm looking to buy a reversal up or sell a reversal down from around the moving average. Tight trading range for 6 bars. Fewer traders are willing to trade with stops, buying above 59, 60, 61, selling below 63. Could you have scalped 1 point below 63? You have to risk almost 5 points to get that 1 point. So I think if you sold below 63, you're not scalping 1 point. You have to be holding, hoping for 4 or 5 points. Bulls trying to get a high 2, second reversal up, 59. But I think the tight trading range weakens it. I do think we're going to get profit taking. As I said, at least a 10-point rally before the end of the day. Yeah, maybe 15 or 20 points. But the probability for these setups is just not very good. There are problems with everything. You know, here, tight channel, bear bar, here, tight channel, reasonable buy. Here, you got tight channel, bear bars. You got a second buy here, but it's a tight trading range. And you're being forced to buy a little bit high up. So, you know, the math is very difficult if you're looking for stop entries. Traders are deciding, is this the start of profit taking, or will we get a low 2 bear flag and one more push down? If we do get one more push down, tight trading range, late in the bear trend, probable final flag. So we're probably not going much lower if we go lower. 20 gap bar sell, but you know, as I said, I think we're probably going to get profit taking, so I would not be selling with a limit order at the moving average. Bears will try to get a double top 55, a low 263 at the moving average, but we have 3 good bull bars in the past 6 bars. So I think we'll probably go higher. If the bears get a good bear bar 66, that would be a credible short, a 20 gap bar sell, low 2, but I do not think they'll get a good sell signal bar. Panic buying, it could turn into panic buying, a little bit of panic buying here. The bears, there are bears selling right here at the moving average. They've been happy to sell below an average price for 40 bars. Now they're finally getting a chance to sell at an average price. If enough of them do it, we will get a credible sell signal bar 66. But I think we may get a buy the close rally here. Bulls giving up, right? Profit taking, short covering. Bears giving up. Excuse me, bears giving up, short covering, profit taking, and bulls are buying, hoping that we get a couple legs off. Since selling below 34 was a low probability bet. You had some bulls who bought the 34 low, and then they bought more higher. Either, well, 53 is not low enough, but down here they bought trying to get back above that 34 low. We should get above the 34 low at a minimum. We've already had more than a 10-point rally. I suspect we'll get a couple legs up. Less likely we'll go up far, like up to here. For the bears, a low 263, but surprise bar up 66, so I would not take the short. I would wait for a micro double top. Remember, 3,300 has been an important price over the past several weeks, so that might be the magnet at the end of the day. It's right around yesterday's low. Buyers or sellers, 67 low. I suspect it'll be sideways for a few bars. Surprise bar up 66. That will discourage bears from selling below 67. You'll have some bulls taking profits here. They have a windfall profit, and other bulls looking to buy a reversal down, betting that the first reversal down will be minor. The absence of big bull bars closing on their highs, I think, reduces the chances of this just going up all the way into the end of the day. Similar to 39 or 42, probably buyers below 67, and most bears will wait for a micro double top or some kind of a low 2 like 41. I want to look at ticks. No, that's a surprise. Ticks hit 1,000, so that's probably not the final high in price. High one always in long 66. For the bears, a gap bar, a gap between the moving average and the 60 low, and a bear. But tails 67, 68. It's similar to what we had 37 and 39 and 40. Not great math for stop entry bulls 68. They probably need a stop below 64. They would not let it get hit. It would be like buying above 41 or 42. You have a stop 34, and you're going to get out before it gets hit. You might get out 4 ticks or 8 ticks below any bar, or 1 tick below a bear bar. I1 68 might get an II here, but the tail 67 and the doji 68 will reduce the number of bulls willing to take the buy. And for the bears, I would not take the sell. Still small pullback bull trend, possible wedge 61, 67, but nothing to sell right now. Bulls are still buying. Bears are still buying. There's a little short covering. The doji 67, again 68, probably will be an II magnet. So we're probably not going to go up much from where we are. 3,300 has been an important price for a few weeks. It's also at yesterday's low. I think we'll probably end up closing the day right around 3,300. So even though it's a small pullback bull trend, I suspect we're not going to go a lot higher. Remember I said that I thought we would bounce 15 or 20 points, and we're just about 20 points right here. The bears, wedge 61, 67. Test of the 3,300 big round number, but small pullback bull trend, and it looks like the market is paying attention to 3,300. We were around it for 10 bars here, and we're back to it. It's also yesterday's low, so I think we'll probably finish the day around where we are. We may go a few points lower, a few points higher, but I think we're probably not going to go far from here. Reasonable for bulls to get out below 71, parabolic wedge. And for the bears, I would not short. Small pullback bull trend and magnet right around where we are, 3,300. Bulls exiting. Some bears selling, but I think mostly bulls exiting. The bulls have bought here. And also you have bulls on the daily chart who are waiting all day for a bounce to get out, and they finally got their bounce and they're getting out. Probably will form a higher low. I said that over here. No, it would be a head and shoulders bottom, left shoulder, head, right shoulder. I think most of the bears selling below 72, looking for a scalp down to the middle of the range, which would be about 4 points around where we are. Similar to 43, similar to 43. Pretty good minor reversal. And then sell off. Traders wondering if the trend is resuming or if we'll get a higher low. When you get a pretty good minor reversal, especially with a pretty good bottom, odds are you're going to get the higher low. In this case, we did not. We got the breakout. Again, probably we'll get a higher low. So not a good sell to close bar. The bulls want a bull bar closing on its high, but 73, surprise, might get a couple legs sideways to down. Bears are trying to avoid a bull body. If they get a bear body, they're hoping that we'll get down to the low of the day. Right now, I do not think we'll get down to the low of the day. Consecutive big bear bars, always in short, but it could simply be a test of breakout over here. I still think we'll get a higher low, but I think it's going to be difficult to structure a buy after the two decent bear bars. For the bears, it's still on the short below 72, and maybe it's sell to close. I would not. We're in the middle of what probably will be a trading range, so I still think we'll try to form a higher low. I obviously want the day to close on its low, and for Monday to gap down, and for the market to quickly get down below 3,200. But I'm probably not going to get what I want. For the bulls, higher low major trend reversal. Obviously, not enough time for a major trend reversal. And two reasonably big bear bars, 73, 74. I think the bulls would need a reasonably big bull bar, 75, to attract buyers. Can we get back to 3,300? There's still time, but that's not a good enough bull bar to attract many buyers. Bulls trying to get back to 3,300 by the end of the day. Pretty interesting day. Huge bear trend, but I think a couple things made it difficult. First, we haven't had a strong bear trend day like this in months. So traders look at it and say, that's not what the market's been doing lately. So they're hesitant to trade. And then you have very big bars, and a lot of the stop entry signals, sell signals, were hard to take because you're selling below bull bars or doji bars. Yet the market fell a long way. We're down about 1% on the day, and we're about halfway down to where I think we're going. And a lot of times the market has to get halfway there before traders decide that it's going to get to the target. So that's the target region, and we got about halfway there. For the bulls, it's a 50% pullback of this final rally, and they're hoping to get one more leg up. And for the bears, it's a reversal. Wednesday was a sell signal bar. Yesterday was the entry bar, but instead of a big bear bar closing on its low, it was a bull bar. Yesterday then was a high one bull flag. For the bears, theoretically, they're still short below Wednesday's low. We did not go above Wednesday's high. And for the bulls, it was a buy above yesterday's high, but I would not take the buy because I've been saying that a 5% correction is going to start at some point in the next 3 weeks. And it may have started on Wednesday. I thought we might get one more push off. We still might. But I think this is where we're headed at some point over the next month. So for the bulls, outside down, but at the moving average, not good for the bears, and fairly conspicuous tail, not good for the bears. And weekly chart, I'm still not confident. I'm not convinced that. I think it's 50-50 chance that we've begun the correction, and 50-50 chance we'll get one more push up. We had two unusually big bull bars on the weekly chart, late in a bull trend, probably climactic, probably an exhaustive end of the trend, 60% chance, but 60% chance also that we'll get one more leg up before we get the reversal. So on the close of last week, there was a 60% chance that either it was the high or we get one more push up, and then we get the test down to the bottom of the biclimax. So that's the minimum target, this low, the bottom of the most recent biclimax, and it's around 3,200. And since traders think in terms of 2%, 5%, 10%, 20%, if we're near 5%, we'll probably make it to 5%. So if the high is whatever, 3,300, 5% of that is about 160, 170 points down from the high, which would be just below 3,200. It could be more. You know, back here, I said we might get a 5% correction. We got a 10%, but that's a reasonable goal. It's unlikely that a bull trend that looks like this is going to become a bear trend without first entering a trading range. And I said that back here. We got a surprisingly big sell-off, and the trading range lasted 2 years, but it was unlikely that the bears were going to get a bear trend when the bull trend looks like that without the market first going in a trading range. Monthly chart is interesting because we have 1 week left to the month, next Friday. And this is the 5th consecutive bull bar on the monthly chart. It's a bull bar now, but if we sell off next week, all of a sudden, it will not be a bull bar. It could be a bear bar. So I'm going to pay attention to the open of the month. Let me just put that on the 5-minute chart. Right now, it does not look like we'll get there. But, this is the 5th consecutive bull bar on the monthly chart. That's a lot. So we may not get a 5th consecutive bull bar, which means that the month may close below the open. 32.46.5. Now, I've been saying that I'm expecting the market to get down to 3,200, and the sell-off would begin sometime either this week or within the next couple of weeks. If it did begin this week, and if it gets there quickly, we could get back below the open of the month on the monthly chart. Let me go back to, and if we were to get below the open of the month, instead of a bull body on the monthly chart, we would have a bear body with 4 consecutive bull bars. Even a bear body is probably a minor reversal. I think the best the bears will get is 1 or 2 bars down, so 1 or 2 months down. The bears will probably need a micro double top. 5-minute chart. It was really pretty interesting. Sometimes in these huge days, you get sell climaxes, and they look big enough to be the end of the trend, and then you find out they become measuring gaps. You know, I talked about that over here. Let me just do this. Looks like 50% pullback, testing the opener of the week, consecutive sell climaxes. It's a good candidate for a bounce, so it's a reasonable buy. But we still have a possible gap. It could be a measuring gap. Most of the time, when you have the biggest bear bar coming late in the trend, 10, 20 bars into the trend, it's an exhaustive move, and you get a profit-taking bounce or a reversal. And here we got a bounce, but the 20 high did not get back above that 9 low, the breakout point. So you got to be wondering, is this a double top with 11? And it turned out to be. And then we got that really big 22, and then follow through 23, and you say, that's not, that's really unexpected. So you'd expect at least a small second leg down, and you say, well, this is even a bigger sell climax than that, and therefore it could be an expanding triangle, 1, 2, 3, and the low of the day. And it turned out to be a measuring gap. Tough short. We bounced on 24, again on 26, could not close the gap below 16. So you have to be wondering, is it an exhaustive move, 22, 23, or the middle of a move? And it turned out to be the middle of the move, but very difficult to short. You're selling a sell climax and below a bull bar. And it was like that pretty much all the way down, a low one below an II. And then we have a pretty good reversal up here. We have a bear channel, a break below the bear channel, a reversal up, We're below yesterday's low. We're outside down, above yesterday's high, below yesterday's low. Possible low of the day, a good candidate for the low of the day. It was likely to remain the low of the day. And 41, not a good looking sell. We have 5 bars without a bear body. We have a pretty dramatic reversal. Probably we're going to go sideways. Typically, when you get a sell climax like that, you're going to go sideways sometimes all day. Well, we broke to the downside and we got more climactic selling. So chances are we're going to be sideways maybe for the rest of the day. But this is one of those rare days in which the selling was relentless and we broke below. Another decent bull bar, reasonable buy, especially if you can use a wide stop. Tight bear channel, higher probability wait for 2 or 3 bull bars. And here, a low too short, a small double top, 54, 56. Not a very good looking sell setup yet. We got a breakout and a follow through bar. Looks like we're going at least a little lower. Since 53 is a reasonable buy, we'll probably get back to it by the end of the day. That's not a great looking buy, 59, 60, 61. A lot of the bulls will want a second buy, and they got it at 64. Minimum target would be the 53 high, but I said I think we'll get a 15 or 20 point bounce because the size of the sell-off is so big that 5 to 10 point bounce is not going to be enough. You'll probably get more profit taking. We get the same amount of profit taking except everything's better. So you expect a couple legs sideways to up at least 10 bars, and we expect that here. But the bars are so big that it will not be 5 or 10 points. It'll be more like 15 or 20 points. And we've got gaps below the bar and the moving average gap bar. I think this is probably going to be the low of the day. We might get one more push down to a wedge, 1, 2, 3, but this is a big enough bounce so that it's more likely that we'll get a higher low. A little bit of a wedge with 61 and 67, but it's a small pullback bull trend. You got dojis. Trading range is more likely. It's a minor reversal, but if we correct 50%, it could still be a 10% sell-off. And we got that sell-off and a bounce into the close. I got to zoom in on this because you can't see anything because we have so many points on the screen. First bar of the day, I said yesterday that 53, 55, it looks like we're getting dojis and probably the start of a trading range, and therefore this is probably a bull leg in a trading range, and we'll probably get a sell-off down to the beginning of it, maybe this 56, 64 low, maybe down here, 60-minute moving average, open of the week. That's probably the support zone. Instead, we went upside down and far below yesterday's low. 25% chance a big bear bar gapping up is going to be the high of the day. It turned out it was the high of the day. Bulls tried to get, you can call it a high 2 attempt, bar 5, but the high 1 never triggered above 2. And we have 3 bear bars in the first 5 bars. So it's probably limit order trading at sellers above. The bulls have a pretty good bull bar, 6 for them, but the bears have a double top bear flag. It's a good enough bull bar that a lot of the bears are not going to want to sell below 6. 7, 2-bar reversal, but right at the moving average. I think we're going down to the 72 low, the 64 low, maybe the 60-minute moving average, and less in the open of the week. I don't think we're going to go a lot lower, but in fact we did. So reversal down 7, follow through 8. Are we always in short? I don't know. I think we're probably still always in long. And then we got a surprisingly big bar, 10. Are we always in short? We might be, but the bears need follow through. But instead we got that bull bar. So we still might be always in long. And then we broke to the downside on 12. We're probably always in short, but it might be a parabolic wedge. 1, pause, 2, pause, 3, and possibly pause or reversal 13. Is 12 buy or sell the close? It's the third leg down, parabolic wedge. I think there'll be more traders buying the close of 12 than selling the close. We're testing the breakout point here. This was so dramatic, up and down. We may test that 49 low as well. But at this point, I don't think there's much more down. Usually when you get these climactic repeated climactic bars, you're going to end up in a trading range for several hours and often the rest of the day. So the bears, a low one, 14, but 12 is a good candidate for the low of the day. Maybe we get one more push down. 60% chance that either 12 will be the low, or we get one more push down and that'll be the low. So not a great short. 15, and the bulls have a decent buy. 16, I think it's a good buy. At a minimum, we should get to the moving average, maybe up to the 12 high. It's possible that we could reverse the entire day, but the minimum target would be in that general area. That's where the bulls will take profits and the bears will start thinking about selling again. Pretty good bull bar, 20. Do you sell below 20? I would not. The bears double top with 11, but 4 bull bars at support. The open of the week, 60-minute moving average. The start of the channel here, a 50% retracement. The bears got a bear bar 21, but after the 4 bull bars, it's really not a high probability sell. Yet we got a surprisingly big bar, 22, and that was, I think, the biggest surprise bar of the day. The odds were to that point that we were going to enter a trading range and that we were trying to put in the low of the day, and that was a surprisingly big bar. And we got 2 big bars after. We got the one afterwards as well. What was the volume on that? Didn't even check. It's hard to see. It looks like it's about 23,000 contracts. No, 43,000 contracts, so relatively big. And then follow-up surprise 23. This could be a bear dominant type of bar, a bear major surprise, and we might get a measure move down based upon the height of the bodies. I still think it's probably going to be exhaustive, and that will form a trading range, but not right now. I think the bulls will need at least a micro double bottom. Bulls trying to get a bottom here, 24. I would not buy it. I'd want a second bottom with a good buy signal bar. And the bears have a low 1 below 26. We got a new low 25, below 1 26. Micro top, but pretty good bull bar 24. Tail below 25. Bull body 26. I think a low probability short. Might get a little bit more down. It's possible it's a spike, and we got 3 pushes down. But far below the moving average. Bull bar, tail, bull bar. I don't want to take that stop entry sell. And bear's got a decent bear bar, but a tail. And now we have an II. And this is interesting. I think it's a reasonable buy. You got a series of sell climaxes every big bear bar. We have an II. Sell climaxes often end with II patterns, so it's a buy above 29. It did not go above 29. It's a sell below 29, but it's also the third leg down. 1, pause, and then 2, pause, 3. So it's a possible final flag. And II late in a bear trend often becomes a final flag. It's not a very good looking sell. It's an II, probably not much more down. Yet we just kept going down and down and down. Bear bar, not very good follow through. And parabolic wedge, can you buy above 31? It's not a good enough bull bar. We have a big bear bar 30. We have a parabolic wedge, but we have a tight channel and a bad signal bar and a pretty good bear bar 30. You cannot buy above 31. And bears getting it under the breakout and follow through. It looks like we're in a free fall and that we're going lower, but I think we're going to get a climactic reversal soon. So, it's, I think, difficult to manage selling below 32, 33. Then we had that huge bear bar 34. I thought it was going to be more buy the close and sell the close. We have a parabolic wedge. We're breaking below the bottom of the channel. We're breaking below yesterday's low. I think chances are we'll get a lot of profit takers. They'll look at this and say, that's a really nice gift. I wasn't expecting that. I'll take some off. Bull's got a very good looking bull bar. We have an II here. A second one, we had an II. It became a bear flag. We have an II here. I think it's a high probability bet that there'll be buyers above 35. Should get near the moving average, maybe to the 32 high. Possible spike, parabolic channel. We may get all the way back up here. But at a minimum, I think moving average and 32 high. So I think this is a very good buy setup. For the bears, it's a low 1. we're near the target, but I think we'll get, bears will need a low too. So probably buyers below 39. The bulls have a high one, 40, 41, but doji is right below the moving average and right at the target zone, 32. This is where I think bulls sell out of their longs, not where bulls buy. Are you going to get a big bull trend out of this? No. A very tight bear channel, especially through here. This is a minor reversal. The bulls will probably need a higher low, major trend reversal, maybe a lower low to get a big swing up. So it's a minor reversal, which means we're going to get a test down, and therefore I don't want to be buying at the high. And we have the high one above 42, but 4 dojis at the moving average. I would not take the buy. And then the bears got a big surprise outside down 43. I still think at this point we're going to get the higher low. And the bulls tried 44, but did not trigger. And for the bears, 44 was a pullback, 45 a low one sell signal bar, but you're selling it in the bottom of what will probably be a trading range. So not good math. The bears are hoping it's a double top. We rallied on 31. We rallied here, so double top neckline, measure, move down. At this point, I thought it was more likely we would get a higher low, if not a higher low, than a lower low, and less likely that we would just continue down for the measure move. That's what we did. Reversal. Now 48. We have outside up 47, outside down 48. So it's an 00 in a bear trend. It's breakout mode. It's an 00 bottom or an 00 bear flag, but there probably are buyers around that 34 low. So it's really not a very high probability trade. If you're taking it, you're holding for a swing. And it turned out to be one of those days when it did go down a long way. I would not buy above 49. Another acceleration downward, but you have to bet that we're going to get profit taking between now and the close. And I don't know how far up it'll go, but the odds are we're going to get profit taking. And then the bulls got a buy signal bar here. I think it's a reasonable buy. It's a tight channel. I said that I thought it's not a lower low major trend reversal, that it's nothing but sell off so that traders will start the process over again, and they'll need a minor reversal and then a major trend reversal. But I thought this was a candidate for a minor reversal up. And okay, entry bar, bull body, but then disappointing follow through bar 54, outside down. I think a lot of the bulls will try to get out around break even. And for the bears, if they get out above 53, they got to sell again below bear bar, which is below 55. But the odds are we're going to get a profit taking short covering rally between now and the close. So we're probably not going down a lot longer. Small double top, 54, 56, breakout 57, follow through 58. But I'm only looking to buy at this point. We're getting near the measured move from that double top. And 59, a bear bar. I don't want to buy above that. 60 doji, no, 61, a bull bar. But it looks like a tight trading range, so I don't want to be buying about 61. The bears, a low one with a bear body, 63. But I think we're going to get profit taking, and we're running out of time. It's possible that if we go down, this will be a final bear flag, but I'm not selling at this point. I'm only willing to sell rallies. And then the bulls got a second reversal up, small double bottom, 59, decent bull bar, tight channel, so it's probably not going to be a bull trend, but we should get up to the 53 high, a reasonable buy. And maybe we'll get up above the 34 low, maybe back to yesterday's low. So that is the general area. Surprise bar up 66. I think we're always in long. So traders are buying the close, looking for it to go higher. Bull body 67. So we are going higher, but not consecutive big bull bars. 64, not all that big. 65, smaller. 66, not particularly big compared to the other bars on the chart. It's a pretty good bar, but 67 tail. I think a lot of the bulls will start scalping out. For the bulls, it's a high one, an II pattern, but it's also a third leg up. 1, pullback 2, pullback 3. So it could be an II final flag, and I'm not sure that we're going to go up much from here. And for the bears, a parabolic wedge, 71, but a doji bar, a bear inside bar 72, closing on its low, a better sell. But I think this is a strong enough minor reversal up, and the context is good enough so that whatever sell-off we get, we'll get a higher low major trend reversal, head and shoulders bottom, left shoulder head, and then right shoulder. Good bars for the bears, 73, 74. But at this point, I still think it's more likely we're going to get a higher low, so I would not sell closes. And then we have a buy signal bar, 74, but it's only a doji. Breakout test, 64 high, higher low major trend reversal. But 3 bear bars, 2 of them big, a weak buy signal bar. We're probably going to bounce here, maybe to the 73, sell climax high. Less likely we'll get a bull trend out of it. And then we bounce tail on the bottom of 76, bear bar 78. It looks like we're swallowing out here. Stop entry traders, let's do buy or sell the close. Really, it was a bear trend all day, but there's a nasty type of bear trend in that it's hard to get, it's hard to structure good trades. There's something wrong with everything. The signal bars are not good. The bars are big. The risk is big. The probability is low. You're selling at the low. You're selling below bull bars. But in terms of buy or sell the close, I got to go back a little bit. I thought traders would sell below 1, but I thought we'd probably go sideways. 7, 8 consecutive bear bars, but 7 did not close below 3, so no gap. We have a gap 10, but a bull bar 11. So this is not good sell the close. Is it buy the close? 18. I think we're going a little higher. What about buy the close 19? Well, probably a minor reversal up, and we're right near one of the targets, 2 of the targets, moving average 12 high. So not good buy the close. 23, 22 or 23, probably sell the close, but I suspect that it's more likely to be an exhaustion gap than a measuring gap. It turned out it was a measuring gap. And then none of this is very good sell the close. We're getting bear bars with bad follow through all the way down. 32, 33, breakout 32, close below 31, follow through 33, probably sell the close, and then 34, the biggest bear bar of the day coming late in the day at support, yesterday's low. If anything, it's buy the close. And then the reversal up, 37, closing above 36. Context really good. We're probably going to get at least a couple legs sideways to up, so it's buy the close, but minor reversal. Doji 38, Doji 39. This might be the extent of the rally. So buy the close, maybe 37, 38, but that was it. And then bears, is it sell the close 43? No, we're probably going to get a higher low. We did not. And then breakout 48, close below 47, follow through 49. I still think there'll be buyers around the 34 low, so not great, sell the close. And it just kept going down like that. So not really easy buy or sell the close. 66, probably going a little bit higher, so buy the close. For stop entry traders, let me do it in 2 parts again. The first reasonable short was below 1, but big risk. And then all through here, it's really difficult stop entry trading. I would not buy above 5. I would not sell below 9. I would not sell below 10. I would not sell below 11. Buying above 13, probably okay, especially if you can use a wide stop. 12, the biggest bear bar of the day. So we should get a bounce, but we might get one more little push down first. And then higher probability buy above 16. For the bears, they could sell below 15, but the consecutive sell climaxes down to 12 are probably going to bounce. So I'd rather look to buy above 17. Not a good sell below 20. 21, not very good either, double top 11. But then we get that huge surprise 22, 23. Not a good looking buy above 24, 25. Not a good looking sell below 26, a bull doji. And then II 29, it's probably going to end up as a scalp. This is an instance in which it ended up as the start of another big leg down. 35, obvious, easy buy above the height of the bar. Same with 35 and then 37. Not great. High 1 above 42. Not great. Low 2 below 41. 53, a reasonable buy, but a tight channel. That lowers the probability. Higher probability, wait to see if we get a couple more bull bars. And low 2 is 56. I would not take it. And then second buy signal 64. We should bounce maybe up to that 34 low. So that's a credible buy. And limit order trading, you got to be really careful. If you're in a trend that's just relentlessly going down, yes, you can make money buying, but you got to be really careful because usually there'll be one or more big breakouts that never come back to the breakout point. In other words, measuring gaps, and you end up losing a lot. On the open, probably buyers below 3, probably sellers above 5. I would not buy above 9. Not a great sell. Probably buyers. Let me see. For limit order traders, would I buy the 20 low? No, because it's a minor reversal and it's at the target, the 12 high and the moving average. So I'd rather not buy the 20 low. What about selling 25 high? Probably okay. What about buying the 26 low? I would not. We got bull bars 24, 26, but possible measuring gap 22, 23. What about buying the II 29? I would virtually never do that because it's a breakout mode pattern. So I'm looking for a trend. So I would not sell the 29 high. I would not buy the 29 low. I would do the opposite. If I'm doing anything, I'm selling with the stop below and buying with the stop above. And okay, so now we're probably going higher. So I would not sell above 36, 39. We're probably going to get a second leg sideways to up. So it's okay to buy the 39 low. And I would not do anything with the 40, 41 highs. And here, can you buy the 47 low? I would not. This is not behaving the way the bulls want it to behave. So I don't want to be buying. The 49 high, probably sellers above. 54 low, probably buyers below. And they turn out to be scalpers. 59 high, I don't want to sell. I only want to buy here. Where this is so extreme that the odds are we're going to get short covering. The bears are going to start taking some profits. So I'm not looking to sell above 59. What about selling below 63? I think we're going to get profit taking very soon. So I don't want to do that. And then here, II 69. The rally does not look all that strong. 67, 68, 69. But I'm not willing to sell with a limit order. Really impressive day, but decent bounce at the end. And as I said, if we are in the process of getting a 5% correction, I doubt that we're going straight down. We might do this for a week and then one more plunge. I do not think we're going to go down for a lot of bars. I don't think we're going to go more than 5%. For the bulls, if we get a bull inside bar Monday, then we have a bull IOI at the moving average and a bull trend, and it would be a buy setup. I said on the weekly chart we may get one more brief push up before we get the correct. I had a question about Bitcoin. I almost bought Bitcoin today. That was my plan coming into the day to buy Bitcoin. One of the many plans that I had, but that was one. And then also a question about natural gas. I'm trying to shrink this window because it's way too big. Okay. I used to trade natural gas a lot a long time ago. Obviously in a free fall, a sell climax, so probably not going a lot lower. This is a daily chart, weekly chart, a free fall, very similar to the 5-minute chart that the E-mini had today. So if this were a stock, I would say it's going lower, and I would say I'm not going to sell at the bottom of a sell climax, but we're probably going lower. I might buy puts. So the only way I would sell this would be to buy puts, because it's so climactic. We can get a pretty abrupt reversal. That's the weekly chart, and monthly chart, just an endless bear trend. Daily chart, for me, I would not do anything with it. It's too low to sell, and we do not have a strong enough bottom to buy. And in Bitcoin, there are many different versions of Bitcoin. There's a GBTC, which is an ETF that follows Bitcoin, and we've had a couple legs down, and we have a double bottom, we have a breakout, we have a pullback, we have a double bottom bull flag. So to me, I think it looks like we're going up maybe here. Let me put up the Bitcoin cash index. Bitcoin cash index, same thing. A bear channel tried to break out. Another bear channel tried to break out. Bulls are hoping that we're channeling up, testing this high, maybe these highs. But to me, we're in a bull trend since down here. We have higher low, higher low, higher low, higher highs. And as I said, I came into the day wanting to buy Bitcoin, and I ended up not buying it. But I do think we're probably going to work higher. Bitcoin futures, I've never traded them. And the reason is, I'll show you in a second. Here's Bitcoin futures. It looks straight on the chart, but here's the 5-minute chart. This is my problem. Take a look at any of these bars. 16 contracts, 7 contracts. You know, I don't want to be trading when it's only 5, 10, 15, 20 contracts per bar. The bid-ask spreads, I'm assuming, are wide, 50 cents or something, maybe $1, and it's a rip-off. So I'm not trading Bitcoin futures, but the GBTC has pretty good line. We put up a 5-minute chart. This is the daily chart. 5-minute chart. There's my volume. Let me put up the GBTC. Okay. Even on these small bars, we're getting 10, 40,000, 45,000 contracts. So 60 or 70,000 contracts. So a lot of the bars, 10,000 contracts, but there's bars with 50,000 contracts or more. So that is tradable here, over 100,000 contracts bars. I used to actual Bitcoin, and I've tried several exchanges, and it's really, I think that with Troy Wade, they have all these restrictions on how big a position you can take. I don't know. The spreads are big, the commissions are big, so I have not traded actual Bitcoin in quite a while. So if I were doing anything, I would be trading GTC, the ETF, which I've not yet traded, but that was my intent to buy it. I did not buy it because I had too many other things, so I was doing way too many other things. All right, so next week is the final of the month, and it's possible as bullish as the E-mini has been for 5 months. Here's the month chart. So as bullish as the 5 months, it's possible that body on the monthly chart. Okay, hope everybody has a good